Ladies and gentlemen, good day and welcome to Hindustan Aeronautics Limited Q4 FY24 earnings conference call, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Manav. Good evening, everyone. On behalf of Elara Securities, we welcome you all for the Q4 FY24 and FY24 conference call of Hindustan Aeronautics Limited. I take this opportunity to welcome the management of Hindustan Aeronautics, represented by Shri C.B. Ananthakrishnan, Director Finance and CFO, with additional charge of Chairman and Managing Director, Shri Jayadeva, Director Operations, along with their team. We will begin the call with a brief overview by management, followed by Q&A session. I'll now hand over the call to Ananthakrishnan, sir, for his opening remarks. Over to you, sir.
Thank you, Harshit. Good evening and welcome to you all. Thank you all for joining us today for this earnings call. In fact, yesterday we declared our financial results for the fourth quarter of the financial year 2023-24, which has been well received by the investor community. The same has also been uploaded in our company's website. And today for this earnings call, I have with me Mr. Jayadeva, Director Operations, and other senior management team for the interactions. It has been quite some time since our last interaction, which was sometime in May 2023, last year, almost exactly a year back. And we are eager to engage with you today, providing insights into our financial results, offering updates on the various physical advancement of our project, and addressing any clarifications you may see. The FY23-24 has been an exceptional year for HAL and was a journey of resilience, innovation, and unwavering commitment to meet the expectations of the various stakeholders. Despite the challenges we faced in the geopolitical landscape and supply chain disruptions, HAL has once again demonstrated the capability to strive through the adversity. You are aware that our revenues have surged to new heights in FY23-24, marking a very significant increase compared to the preceding year. Revenue from operations almost stood at 30,381 crores as compared to 26,928 crores in the previous year, almost registering an increase of 13%. We have given our guidance last year for achieving a double-digit growth from FY24-25 onwards upon the commencement of the LCA aircraft, delivery of LCA aircraft against the 83 LCA program. However, we could achieve this target a year in advance in FY23-24 itself. With our robust order book and a very strong pipeline, we are confident of sustaining this growth momentum. Apart from focusing on revenue growth, we have also been focusing on cost optimization so as to offer these affordable platforms and services to our customers and also to improve the profitability margins. The manpower cost, which used to be around 23% of the revenue during the year some 2018-19, some 5 years back, 4 years back, has consistently been rationalized to almost 17% during the current financial year. To the last financial year, rather 23-24, and we expect it to bring it down to further to 16% of revenue in the current financial year. Similarly, the overhead expenditure also has been rationalized so that we can eliminate certain avoidable expenditure. The overhead expenditure to revenue as a percentage, which was standing at around some 8% during 18-19, has also been brought down to 4.66%, almost a 3% reduction over the last 3 to 4 years time frame. Improvement is also being noticed in our inventory because we were also very conscious of our inventory holding. When we had an inventory of almost 359 days, almost 360 years inventory in 2017-18, which we thought was quite high, and today it stands somewhere around 159 days, which we feel is the most optimal level below which we would not intend to reduce further. Another area where there has been consistent improvement is on the debtor turnover. This also, as you are aware, from almost 227 days when we had bad times during 2008-19 when our receivables were quite high, which has now been brought down to 55 days, which is again the optimal level I think that will be maintained in the next few years as well. These improvements all have consistently resulted in cost optimization and improvement in the overall profitability of the company. Now, let me also highlight certain initiatives which we have been taking for the future growth and expansions. We are focusing on two major strategy areas during the year 2023-24, and we wanted to continue with our efforts in similar lines in the years to come. One is on the capacity building, as we have always been telling, to increase the capacity to meet the commitments of our customers. And the second one is the capability building, to see that the company is ready for the future requirements and future projects which are coming up. The focus today is on proactive procurement, strengthening the capex, and increasing the R&D investments. HAL has continuously been taking several proactive initiatives in the last financial year towards capacity building for the quick execution and reduce the developmental timelines post the contract signature. Similarly, pending finalization of contracts, HAL also has launched the procurement and manufacturing of our platforms, various aircrafts like Dornier, then your light utility helicopters, advanced light helicopters, then the AL-31 FP engines required for Sukhoi's RD-33 engines. All this has helped us to deliver the two Dorniers to Guyana, which is there for exports, within 10 days of the contract execution. In fact, the contract got signed in the March 24, and we could deliver two aircraft to Guyana. And similarly to Army, when the contract got signed, 25 ALH, we could deliver 6 ALH in FY23-24 itself before 31st March. Similarly, in the case of RD-33 engines as well, where 15 RD-33 engines have been delivered to Indian Air Force within the month of contract signature. We are also investing in various greenfield projects and capacity augmentation of various programs. As you are aware, the new helicopter factory has come over into Tumakuru, third line of LCA, which is very, very critical for augmenting our capacity in respect of delivery of the LCA Tejas aircraft, has also been established, is getting established in Nashik, and we expect it to become operational sometime in the month of October 20 in the current financial year, that is 24. So that these infrastructure and facilities are readily available for launching the various manufacturing activities immediately on receipt of the customer orders. And meeting our customer requirements is of utmost priority to us, and we understand today there is a need for the services to expedite the delivery so that they can acquire the assets at a faster rate. To support this requirement as a proactive approach, HAL also has been investing towards capacities, as we have already told, to increase the indigenous platforms, increase the deliveries of indigenous platforms like LCA, HTT-40 and the helicopters. These enhanced capacities would not only enable HAL to speed up execution of the existing order, but would also help us to free up our capacities for additional orders from our customers and aggressively pursue the export markets. We have also got a very robust capex plan because we keep expanding and then we are getting newer projects. So the capex plan for the next 5 years is estimated to be somewhere between 14,000 to 15,000 crores, which translates into an average capex of almost 3,000 crores on an annual basis. This capex would also be utilized for augmenting the manufacturing facilities, for establishment of ROH facilities for various platforms. In addition, as you are aware, since we are also embarking on a new project like LCA Mark II, and then the TOT, GE 414 engine manufacturing, then the IMRH engine manufacturing, and the various infrastructure which is required for design and development of these newer projects of IMRH, AMCA, and various other D&D projects, we keep investing in our capacities and building wanting to invest in capital expenditure for all of these projects. We also wanted to create certain strategic assets which would enhance our capabilities in the field of forging presses. So we plan to invest a 20,000-ton isothermal press and a 50,000-ton hydraulic press for manufacturing forgings for engines and aerostructures, and carbon fiber facility with an investment of almost 600 crores for our various platforms. All these are intended towards indigenization activities being picked up, because we have realized now in the recent geopolitical situation there is a larger need to become self-reliant and to keep indigenizing more and more so that in the years to come, in the next 5 to 10 year time frame, we will have all these strategic assets where our dependability on the foreign sources will come down drastically. And as you are aware, HAL has been developing more and more indigenous platforms. In the last 10 years today, we have got a range of indigenous designed and developed platforms and less of licensed production, and we wanted to really maintain this trend. And with that view, we are investing heavily on R&D as well. So we have sanctioned almost 4,000 crores as part funding for our IMRH product. The board has sanctioned that, and we have started initiating the various activities on the R&D front as far as this IMRH's program is concerned. Similarly, we have also launched the utility helicopter Marine, which is the naval requirement, with internal funding of around 2,000 crores for the Indian Navy from our own internal resources. As I had told you, in the current geopolitical situation and the need to be self-reliant, our indigenously designed and developed platforms, R&D efforts are of critical importance. We have brought indigenously designed and developed state-of-the-art platforms like STT-40, LUH, LCH, LCA Mark 1A, making India among the global players with tremendous opportunities for export. Our R&D expenditure is on an average around 7 to 8%, which is among the best in the industry. As you are aware, we are also earmarking 15% of our PAT towards creating an R&D corpus every year. Apart from certifications from the Indian Trade-worthiness authorities, since we are trying to embark on to the export, HAL is also focusing towards certification from the global agencies to enhance the outreach of our products. These efforts are helping us to progress as an end-to-end solution provider in the aerospace domain. Now, most importantly, I would like to update on the order book position. The order book of the company as on date is around 94,000 crores, which is almost 12,000 crores more than the order book which was there as on last year, that is on 1st April 23. From 84 to 82,000 crores, today it is 94,000 crores even after executing.
Ladies and gentlemen, we have the management line disconnected. Please stay connected. We will get back. Ladies and gentlemen, thank you for patiently waiting. We have the management back with us. Over to you, sir.
Yeah. Sorry, I was talking on order book position when the call got disconnected. This is something very, very important for us, all of us. So the outstanding order book as on date is almost 94,000 crores, which is showing even after liquidation of almost 30,000 crores, it stands at 94,000 crores. So the increase is on account of the conclusion of various contracts, almost close to 19,000 crores in the last financial year, including RD-33 engines, and then the ALH for Army, then ALH for Coast Guard, then the various types of engines, and then the Navy Dornier 25 numbers of midlife upgrade, and receipt of also the ROH repair and overall orders and spares for the supply of almost 21,000 crores. We have also received an export order of almost 500 crores, which I have been telling on the 2 Dornier aircraft to Guyana, which included that almost 200 crores of Dornier aircraft. In addition, significant progress we have also made on the AL-31FP program, 12 light utility helicopters and 12 additional Sukhais towards conclusion of contract. The proposals are at very final approval stages, and we expect it to get the same finalized very soon. These orders will happen in a timeline of less than 6 months to 1 year, and we expect almost 47,000 crores of orders to materialize in this 1 year time frame. With these orders and the other ROH order book as on 31st March 25, we expect the outstanding order book position to be somewhere around 1,20,000 crores, even after liquidation of the certain portion of order as part of the revenues for the year 24-25. In addition, the order pipeline also looks very promising, with anticipated contracts for LCA Mark 1A, the additional 97 numbers for which AON has already been approved, and then the light combat helicopter Prashant for 156 numbers. Then similarly for the advanced light helicopter Dhruv for 43 numbers from IAF and Indian Army. Then similar Dornier aircrafts are also there in the offing, and Indian Navy is also looking to buy some 60 numbers of utility helicopter Marine. So the upgrade of Dornier aircrafts for which all these programs, the acceptance of necessity has already been approved. So these are all to be converted into contracts, and the initial process has also already been initiated towards that. The aggregate value of all these orders is expected to be somewhere around 160,000 to 170,000 crores, and it will all materialize in the next 18 months to 3 years time frame. These orders will keep our manufacturing lines occupied till 2032 and help HAL to propel itself into the next growth trajectory. The outlook for the current year and the years ahead appears very promising. Each year from the current financial year 24-25, we will be adding new platforms, thereby expanding our product profile. During the FY24-25, we will be scaling up the deliveries of LCA Mark 1A in line with the contractual commitments and commencing deliveries of light utility helicopters as well. The next financial year 25-26, we will commence delivery of our STT-40 basic trainer and civil ALH, which we have initiated the process, and we expect the certifications to get over in the current financial year. And the deliveries for the civil ALH, we have got some interest being shown by some of the Indian customers, which we will be able to deliver in the next financial year. And in addition to the delivery of these LCH helicopters, for which the new orders are expected. The year 2026-27, that is 2 years down the line, we'll see the addition of the marine helicopters to the Navy, to our manufacturing line for the Indian Navy, in addition to the commencement of delivery of prototypes of this Mark II, LCA Mark II, and also commence manufacturing of prototypes of the Indian medium role helicopter, which is the 12-ton category, which is under the design and development. Therefore, the number of aircrafts which are going to get manufactured each year will see consistent improvement during the next 3 to 4 year time frame. During the same period, we will be executing the various engine programs, including AL-31FP, RD-33 engines, then the LM-2500 engine, Shakti engine variants of ALH, LCH, and LUH, besides the new engine design and development program of GE414 with the GE engines and Safran engine development, along with Safran for the IMRH program engine development also will materialize during this time frame. Looking ahead, I envision a very future filled with bright promises, where the brand HAL will continue to build on a solid foundation of trust, teamwork, and unwavering commitment to our stakeholders. We will continue to create value for our shareholders and drive our nation towards the vision of Atmanirbhar Bharat in defense aerospace manufacturing. Thank you all. I think I have given a very concise brief. Maybe now that we can start the discussions and initiate the queries. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Jonas Bhutta from Birla Mutual Funds. Please go ahead.
Hi, sir, and congratulations on a great set of numbers. And a couple of questions, sir. Firstly, from a bookkeeping side, sir, if you can help us understand what transpired in the fourth quarter in terms of gross margins, basically material margins. Given that they've come up upwards of 60%, 63% to be more precise, what drove these margins? Because typically we were more in the 58 kind of band, 57, 58 kind of band. What transpired here, if you can help us with that?
See, as far as the gross margins is concerned, as we have disclosed in our results as well, the change order fee, as we call it, this is with respect to the pricing of IOC contract, the LCA initial operational clearance. We were to supply 20 numbers to the Indian Air Force, which we have completed the supplies as well. So there have been some contractual changes and scope changes have been made, and the contract provided for certain elements of cost to be claimed at a later date as and when it materializes. So we had gone that price fixation redone, and because of which the IOC contract change order 3, which was pending for quite some time, It has been finalized in the last quarter of the last financial year 23-24, and that has resulted in almost 1,500 crores of additional revenue, which is reflected in our last quarter results. And this has substantially increased the margin. And that is one major reason why the margins have gone up in the last quarter, and which has also been reflected in the total, full year as well.
Because if I remove, as in if I adjust that from our top line also, sir, then also we are getting like a 63% gross margin. So this 1,900 crores of change in inventory, is that the pending deliveries of the two LCA Mark 1A prototypes or something that we are supposed to do?
No. That has nothing to do with the change in deliveries. It's nothing to do. It is an accounting adjustment as far as the inventory which is being used, the inventory which has been built in the last year. That is a WIP which is being utilized, which is drawn now, and which is getting included in the current year revenue. That has nothing to do with the pending deliveries. All the deliveries which has been delivered in the current financial year have already been recognized in the revenue, and pending deliveries have not been recognized. So that apart from this change order 3, the other area is that last year the depreciation and amortization, there is almost a reduction of 400 crores between last year and the current financial year. This reduction is on account of the STT 40, which was there in the last year, that amortization, which is not there in the current year. So that is another reason. And of course, there is also an impairment loss which has happened in Sukhoi in the last financial year, which is not there in the current financial year. These two expenditures add up to almost 900 crores, which has also helped us to improve the margin in the current financial year as compared to the previous year.
Understood. The second data that I wanted, sir, could you help us with the platform-wise deliveries made in FY24, like the typical, rotating machine, rotary aircrafts and fixed wing and, and the engines?
No, broadly I can, these aircraft deliveries, it is all on LCA and ALH and Dornier. We have already indicated that the LCA, we have delivered close to some 5 aircrafts of LCA, and ALH some 6 numbers of ALH. Apart from that, engine RD-33 engine, some 15 numbers we have delivered. Now then the 2 export of Dornier, this is also added to the revenue. These are the platform deliveries which has happened, but the major portion is on the repair and overall, which is almost 20,000 crores. Which forms the bulk of almost 68% of our total revenue has emanated from the repair and overall.
Understood. Then lastly, if you can, while you have said, when you expect the NUS to come through, but just a slightly more granular understanding on the status of the program, because, if you're going to start doing R&D today with a 2,000 crore investment, do you think that it will sort of show up in terms of commercial order by FY27? And the second project on which I wanted clarity was the Su-30 engines of the LFP-31. That order's been pending for quite some time. Any particular update on that? So those are my questions. Thank you.
Yeah. As far as the Su-30 engines are concerned, it is in the, it has all been, from our side, the CNC has been over. We expect the order to materialize because it is in advanced stages of finalization. We expect the orders to get materialized in the next 2 months time frame, 1 to 2 months time frame, it should happen. And there is nothing which is left from our side. So it is the process which is happening. So we will be able to get it done. And the UHM program, it is in the developmental stage. We are confident that in the next 2 years, we will be able to convert it into a commercial contract and start executing the deliveries. Maybe Director Operations can add to that.
Yeah, this UHM program is for the Navy. It's a naval ocean, maritime ocean of the ALH. So in addition to existing ALH features, we are also bringing in new features like blade folding and assisted track and landing onto the ships. So these are the major things which the UHM will support now. So we are in advanced stage of proving all these new features on the helicopter, and we are on track for this also to be flight tested and completed during the next 2 years. So we are good to go by production runs from 26 onwards. In fact, we would also like to start this in advance like we did in other programs. But we can expect delivery from 26 to 27 onwards.
Understood. Thank you and all the very best, sir.
Thank you. We have our next question from the line of Abhishek Podar from HDFC Mutual Fund. Please go ahead.
Thank you and congratulations for great numbers, sir. So first regarding the LCA Mark 1, if you could, give some understanding that we currently have 83 number of orders and there is an expectation of 97 orders more. How will the production ramp up happen here in next 3-4 years, including, both the orders?
Yeah. We have got 83 numbers. The delivery timeline, the peak delivery rate at which we have to deliver for this 83 contract is 16 aircrafts. So we are at present in our LCA division and the aircraft division at Bangalore, we have got the capacity to produce 16 numbers. We wanted to augment the capacity to 24 numbers because we will want to expedite the delivery of this 83 Mark 1A. And it's waiting further orders, which is also, I think you are aware that another 97 also is likely to come. So for the 16 aircraft is not sufficient. We want to augment the capacity to 24. That is the reason why we are started establishing the third line in Nashik. The activity has started last year, sometime in September, and we expect the jigs to become, jigs are all getting installed today, and the third line is likely to become operational from October of the current financial year. So this year, probably we wanted to have at least one aircraft rolled out from our Nashik division to start with. And from next year onwards, Nashik division also will be equipped to produce another 8 aircraft. So depending on the requirement, we will be able to expedite the delivery beyond 16. But 16 will be the minimum as per the contracted delivery schedule. But we would like to expand our capacity to see that this 83 Mark 1A contractor is getting liquidated a year in advance of the contracted delivery schedule, so that we can take up the subsequent 97 at a much faster rate, and we will be able to complete the entire 97 plus 83 latest by 2032-33.
And sir, how much will be in 25 this year?
In the current year, as per the contract, we are supposed to deliver 16 numbers, and this is what we plan to. We are overall, even though some challenges are there, we are trying all our efforts to see that the 16 numbers are getting delivered.
Okay, 16 plus 1 at Nashik, so 17 maybe this year, sir.
No, we would keep it at the 16 numbers is what we have. Now, Nashik, we are making efforts to see that it happens.
Understood. So second question, if I look at the order pipeline and the current order book, and we have LCA, and there is LCH, and there is a RD engine, and then there is AL31 and Sukhoi and SG40, sorry. So all these 5-6 are very large programs. Would you expect the bunching of these manufacturing to start in 26 or 27? How do we see that ramp up happening, sir?
Oh, what is the last one?
So my question was that we have 6-7 large programs, including LCA, LCH, ALH, SGT40, probably LUH, and there are 2 engine programs, RD33 and ALF31
Right.
engine. So these 7 to 8 programs, would we start seeing a bunching up of the manufacturing happening in 26 or 27, because all the programs will be in the manufacturing stage by that time?
Yeah, but not bunching really, because we have got the facilities created for each of these platforms separately. So we will be in a position to, manufacture all of those. So it will all happen between this next 2 to 3 year time frame. But since we have got independent capacities available at different locations, it will not be really be bunching. They will be able to independently handle and start manufacturing and delivering the product. Like for instance, a helicopter complex is capable of producing up to 30 helicopters in Bangalore only. Then the Tumkuru facility is also ready for manufacture of another 30. And as far as the LCA is concerned, the 2 facilities at Bangalore is capable of producing 16. Third line is getting created at Nashik. And in Nashik, we are also creating a line for SGT40 apart from the LCA and the Sukhoi line. So SGT40 also will get produced from Nashik. And the engine programs, already we have got the capacities at our Koraput division for AL31FP engine. So we will be able to fully utilize that capacity. So all in all of these programs, we are having independent capacity, facilities where they can produce these products and the quantities which are required.
So, sir, all these facilities by 27 should start producing all these platforms together,
yes.
Individually, obviously. Yeah.
Yeah, we will, like for instance, AL31FP engines already we are producing and supplying to the Indian Air Force. Then, as far as ALH is concerned, again, helicopters we have been continuously producing, and we are supplying it to the Air Force, to the various defense customers. LCA, we have started supplying to the Indian Air Force. So SCT-40 will start commencement of deliveries from September 25 onwards, from the next year, that is 25-26 FY, SCT-40 should start getting delivered. So we will all be delivering, it will all be in phases. It is as per the contractor delivery schedules, we keep delivering those things.
Understood, sir. So one last question. If I look at the EBITDA margins, in 22 it was 23%, and last year it was 27% in 23. And this year, if I take off the one-off item for LCA, then it is about 28-29%. How should we think about these EBITDA margins for next 2-3 years, sir?
See, broadly, what we expect the EBITDA margins should be in the range of, on the most optimistic note, it could be somewhere around 32 to 33%, and at the minimum level, it should be not less than 29%. Because broadly, our operating profit ranges between 18% to 20%. The amount depreciation and amortization is approximately around the 5 to 7% range, and the interest income may add up to another 6%. So this would mean that it should be somewhere around 30-31% should be our EBITDA margin.
Okay. So after adding 6% interest income, it will be 32-33. Excluding that, it will be 26-27%, sir.
Yeah. Without interest income, it should be somewhere around 26-27%, and with an interest income, it should be around 33%.
Understood, sir. So all the best. I'll join back in the queue. Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to two questions per participant. Should you have a follow-up question, we request you to rejoin the queue. We have our next question from the line of Dipesh Agarwal from UTI AMC. Please go ahead.
Yeah, good evening, sir. So my first question is, with this 97 MK1 order, possibly by end of FY25, would there be any change in the requirement of Tejas MK2 in the future, or would there be any cannibalization?
Mark 1 order from any.
So this 97 is being procured in the Mark 1A configuration. So this will not have any impact on Mark 2. Mark 2 is under development now. So IAS has got the range to accommodate more aircraft. That's what we feel. And we don't see this Mark 1A cutting into Mark 2 or vice versa. So it will not happen that way. Because the Mark 2 is a different, it's a different weight category aircraft, and the roles are slightly different. So IAS can accommodate both. So we don't see any each other cutting into other process.
Okay. So is it fair to understand it would be in lieu of MMRCA not going through the ramping up on the Mark 1A?
No, we will not. As far as HAL is concerned, we are getting these orders, and our sort of views ends with that. Whether MMRC will be there or not, it is for the teachers to answer.
Sure. And sir, on the Super Sukhoi program, when do you expect the order inflow for the Super Sukhoi, and how would be the execution timelines on this?
Sukhoi upgrade, you are talking about Sukhoi upgrade?
Yes, sir.
Yeah, Sukhoi upgrade, now the case has been initiated, and we will be also participating in the program. In fact, HAL will be the lead agency to integrate the Sukhoi upgrade program with the indigenized industry, so Indian industry. So we have that program will now pick up speed, and then we will start. We have already started the discussions with the various stakeholders, and we will probably in the next 6 months time frame we should be able to have some contractual clarity on these things. AON has already been approved for that. That is, that acceptance of necessity has already been approved. So it should get converted into the contract shortly. Once we get more clarity and more discussions happen, and the contract negotiations will commence thereafter. Once we submit the quote, and then we'll be able to finalize it. But this is going on in the right way, and we expect the things to materialize within the next 1 year time frame.
Sure. And sir, on the ROH front, what kind of a growth should we expect going ahead?
ROH, we expect the growth to be consistent in line with the past, and it should be somewhere between 8 to 9% growth should be there in ROH activities.
Sure. Thank you.
Thank you. We have our next question from the line of Gagan Thareja from Ask Investment Managers. Please go ahead.
Yeah. Good evening, sir. I hope I'm audible.
Yeah.
Yeah. Sir, my first question is around, the potential for sales growth available, given, that you have almost 90,000 crores of order book, which you think next year starting will look more like 120,000 crores of order book. Given the delivery schedules of various platforms, is it reasonable to assume that, an early double-digit sort of revenue growth is consistently possible for the next 3-4 years?
Yeah, that is what we are confident of with the current order book positions and with orders in the pipeline and with new orders likely to materialize in 2 to 3 year time frame. We will be able to show a consistent double-digit growth, which we will be for the next, in fact, all these orders we will be in the position to execute up to 2032. With the current visibility of orders, we will have our workload full for 2032, and we can consistently maintain this double-digit growth without any problem.
Right. And also, sir, while in the last 2-3 years, the share of ROH in your total revenue has kept on going up. I think last year it was more than 70%, while now it stands at 68%. Now from here on, the share of platform-based revenue will increase. And does this change therefore in sales mix? I mean, first of all, how much will this sales mix change by? And secondly, consequently, what sort of margin implications does that have?
See, it's like a cycle. Always this industry, certain contracts will get signed for the platform deliveries in a particular period, and then subsequently, once the delivery happens, the ROH activity will pick up. Again, the manufacturing contracts will keep coming, and it will be going on like that. And today, with the sort of contracts for the deliveries of platforms which we have got, we will start executing those from the current financial year. For instance, this 83 Mark 1A will get major portion of it will start getting executed from the current financial year. And this along with the other helicopters and then the trainer aircraft will keep increasing the manufacturing margin and the the manufacturing proportion of manufacturing sales will keep increasing, and the proportion of ROH sales will keep coming down, but not in absolute terms. Absolute terms, ROH also will keep growing at 8 to 9% growth, and manufacturing will grow at a much faster rate, basically because of the execution of the contracts which have all been signed in the past.
So perhaps in 3 years' time, what could the revenue mix look like?
Interrupt, sir.
Yeah, mix will be probably in the ratio of 60 to 40. 60 will be the ROH activity, 40 should be the manufacturing activity.
Right. And sir, for LCA Mark II,
Sorry,
there are...
sir. May I request to rejoin the queue as there are several participants waiting for their turn?
This is just a yes or no question. We can perhaps just answer in a yes and no. It won't take too much time. The media articles have stated that LCA Mark II prototypes are supposed to come on stream by FY23-24. Actually, according to ADA, they were supposed to, have started coming in FY22 itself. But now the timeline seems to keep on getting postponed. You have indicated it is going to FY27 when you will supply the prototype. So can you clarify, is it going to be prototype supplied by FY27 or by FY25?
See, at HAL, we have started the manufacture of prototype now. So the initial the structural assembly has already commenced at HAL. So we are planning to get the full aircraft ready by around the later part of 25. And so aircraft will be rolled out sometime or will be ready for flight sometime in April, in 26.
Okay.
Around the March 26.
And what is the dry empty date of LCA Mark 1A? Is it 6,500 kg or less than 6,500 kg?
It's around 7 tons approximately.
7 tons. Okay.
Yeah, approximately. Exact figure around 6.
Because, that is higher than perhaps the Gripen, which is a bigger aircraft. So I was wondering, with so much composites, why is the weight, the same as larger aircraft?
I'm sorry to interrupt, but this is certain technical specification which we can discuss.
Okay, sir.
We will discuss.
Thank you.
Yeah.
Thank you, sir. I would request you to rejoin the queue for more further questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to strictly 2 questions per participant. We have our next question from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah. Hi, good evening, everyone, and thanks for the opportunity, sir. I have 2 questions. The first one is, you indicated a short time back that we would be the target for us is to deliver 16 LCA Mark 1A in this financial year. Now, given that we have not delivered such a quantity in the past, so is there any critical equipment system, subsystem on which this delivery is contingent, or we have everything, lined up for these 16 aircraft?
Yes, there are certain supply side challenges are there as far as the 16 numbers delivery is concerned, but we are working on that. Some of the major LRUs, we have to get that because of the geopolitical situation, there have been some concerns, but we are working on that. We are confident that we will be able to get the LRUs well in time for the deliveries which we are planning for the current financial year in respect of LCA Mark 1.
Okay. The second question is essentially on progressive indigenization. So as we move from initial 83 numbers to 97 numbers possibly later on, so what is the kind of indigenization that we are going to see? From it is reported in media articles that from 42nd aircraft maybe we will be setting up some AESA radar. And so if you could just highlight, what would be the major milestones for indigenization, and at the end, what kind of indigenization percentage we will see?
Yeah. You rightly said around 40 plus after the 41st aircraft, we are planning to integrate our indigenous system radar onto the LCA Mark 1A program, and also the Rakshak Kavach, that is EW electronic warfare suite. So with that, considerably our indigenous content in LCA Mark 1A will go up. And in addition to that, there are other so many LREs also which compared to Mark 1, we are also indigenized a couple of a number of them, like the actuators, like flight control actuators and other actuators. So definitely the indigenous content what we can see in Mark 1A will be higher than Mark 1.
Okay. Any ideas of what we will end up with, at the end of, let us say, 180 aircraft?
Sorry to interrupt, sir. I would request you to please rejoin the queue as there are several participants.
No, that was an offshoot. So, just one number would be.
I'll just quickly answer that. It should be in the range of around 65%. Should be above 65% and above.
Great, sir. Great, sir. Thank you so much. And all the best.
Thank you, sir. We have our next question from the line of Adesh Mehta from Motilal Oswal Financial Services. Please go ahead.
Hello, sir. Sir, there was a news flow that HAL would be working with Airbus in commercial MRO opportunity. If you are in a position to give some more details in terms of timeline, scope, addressable market size, margins, that would be great, sir.
So we are trying to enter into civil MRO business at our Nashik facility. We already started this activity at Nashik. And we also entered into some sort of a working arrangement with Airbus for the A320, Airbus 320 aircraft. So it will take shape in a bigger way in the years to come. We have started now, and it's going to take off, and we are going to augment this in the coming years.
So anything definitive happening in FY25 or 26, sir, on this arrangement?
Yes, it will happen. Already, we entered into a contract with them. It will happen.
Okay, sir. I'll come back in the queue. All the best, sir.
Thank you, sir. We have our next question from the line of Lavina Cordos from Jefferies. Please go ahead.
Sir, congrats again on a good set of numbers. Just two questions. One is on the defense. Firstly, how much was exports as a percentage of your sales in FY24? And any color you can share on the defense exports? The government is planning to take it from 20,000 crores to 60. I would believe that HAL would have a very big role to play in this. So any comments you would like to give there, please? Thank you.
Yeah. Exports, as of date, we are not in the numbers are not so great. We are there in export of close to 311 crores, which is approximately very negligible percentage, 1% or around 1.5%. But this initiative of export has gone in, we have really taken it up only in the last 2 to 3 years. Before that, we were contented with this because the defense requirements were there. We are trying to focus on the defense requirement. Now that we have taken it on a full-scale basis with the various aggressively in the export market and with the range of indigenous product profile which we have got today, because earlier we were in licensed production, not much of indigenous products were available. Today we have got a range of platforms where we will be able to offer to the various global various countries. So the leads which we are getting today is quite impressive. So there have been a lot of interest being shown by various countries, especially on the helicopter side, ALS, and on the LCA Tejas. So we are in discussions with various countries. As you are aware, we are in discussions with Philippines, we are in discussions with Argentina, we are in discussions with Nigeria, we are in discussions with Egypt. So there are quite a few countries which have expressed, and we are confident that we will be able to get through some order in the current financial year. This has been something which has been, we are also very eagerly waiting, and we expect that we will get at least one breakthrough order in the current financial year. And once we expect that this sector to grow, we will be able to globally become competitive in the next 2 years, 2 to 3 year time frame, and offer our products successfully to the various countries.
Thank you.
Thank you. We have our next question from the line of Umesh Rao from Nomura. Please go ahead.
Yeah, hi sir, good evening, and congratulations for the good set of numbers. Sir, my first question is pertaining to the deal that got signed between HAL and GE regarding F414 engine. So I just wanted to understand what kind of technology transfer that GE is kind of coming along with HAL, and how can it help in terms of indigenously developing our fighter jet own version in future?
This MOU which has been signed and the contract which will get signed between HAL and GE is with respect to transfer of technology to the extent of 80% of the GE 414 engine. So under TOT, we will be manufacturing the engines in India 80% and 20% will be sourced directly from GE. We will be able to, at this point of time, we will be able to share this much of information and also the specific technologies which we are still working out with GE, and we will probably be able to get it cleared, and more clarity will emerge when we sign the contract. And moreover, it is also a classified information which we may not be able to publicly share.
Got it, sir. Sir, regarding engines, do we see any major export opportunity, whether it is related to fighter jet engine or helicopter engine, as we have also got signed MOU with Safran as well?
No, at present, what we have signed the MOU with Safran for the Aeronautics project and with the GE for the GE 414 for LCA Mark II, it is basically for our own consumption. But as and when the export opportunity arises, we will be in a position to make those exports as well. We are that Safran, especially the engines, it is jointly developed along with HAL, so we will be able to do the export because the IPR will remain within the country. And as far as GE engines are concerned, then we will have to get the case-to-case basis. We will have to get the permission from GE, and then we will be able to export. There is a need. But at present, we are working out for our domestic requirements only.
Got it, sir. Thank you so much for the opportunity, and all the best.
Thank you, sir. We have our next question from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. My first question is on the light utility helicopters. Could you share an update on the limited series units that we were manufacturing against the letter of intent? Have we already started booking the revenues on this? Also, when do you see the bulk order materializing, and how would the execution schedule will look like of it?
Yeah. The LUHF facility has been created, and we are in the process of manufacturing. We have almost 8 aircraft has already been manufactured. We are expecting the first 12 numbers of limited series to be received from the Defense Army and IAF. We are, it is every CNC and all the other activities are over. It is under process of getting the contract getting concluded for the 12 numbers, initial 12 numbers, for which we expect the deliveries also to happen in the current financial year. As far as the bigger orders are concerned, once and as and when these execution happens for this limited series production of 12 numbers, and subsequently based on the exploitation, they will come out with the changes of further scope change if anything is required, or further as an improvement, and then we will be able to get the bigger order signed. But that will also happen. We expect it to happen in the next 2-year time frame. It should be with that AON, and the activity should get initiated.
Sure. So, secondly, on the Sukhoi 30 engines, you mentioned that we will very soon receive the final order. So, will the production start as soon as we will receive the order, or there will be some gestation as to T+12, T+18, something like that?
No, in fact, since this AON has already been approved and RFP and other things have been initiated a year back, we have taken certain proactive action of placing the order with the Russians, not waiting for the contract to be signed. So we are contract signing. Once it happens, we will be in a position to, by then we will get the supply of these engines, and we will be able to deliver it in the next financial year itself. In the current financial year, that is FY24-25, we should be in a position to deliver. We are not waiting for the supply order to be placed with the Russians for the manufacture of this kit, for the contract with the customers to be signed. We have already placed the kit order, and once we get that, we will start manufacturing and start delivering it to the Indian customers.
Just last one bookkeeping question on the developmental front. So, could you tell us the quantum of revenues and the orders which we have done in financial year 24 on the developmental program? That will be my last question.
Yeah. Development sales for the last financial year, it was somewhere around 1,500 crores. Out of 30,000 crores, it was somewhere around 1,500 crores. And the other sales, all put together, it was it would come to roughly around the 5% of the total revenue.
And orders, developmental orders, what was the quantum last year?
Developmental orders, we need to check that. One second. Outstanding order, developmental orders is somewhere around 900 crores.
Understood. Thank you very much for answering my questions. I'll get back in the questions.
Thank you, sir. We have our next question from the line of Girish from MS. Please go ahead.
Sir, congrats, and just one request. We don't hear from you often, so if you could spare more time, we respect your time. But if you could do at least 6 monthly calls. I had 2 questions, sir. Firstly, on the manufacturing side, I know it is going to be lumpy because different platforms get into execution at different points of time. Can you help us with what could be the revenue growth that we should expect for this year, and then maybe is it like 15% and then it steps up to 20-25%? If you could help us, because ROH, as you rightly said, will be lower than double digits. So just wanted to understand that one. And secondly, on the GE platform bit, just wanted to understand that whether there will be a one-time payment that HAL will make and it will be capitalized, or it will be something like a expensed out as you pay some royalty for this TOT arrangement. If you can help with that. Thank you.
As far as your second question is concerned, it is a little premature at this point of time, since we haven't started our commercial discussions as yet with GE. So we would like get to know what is the sort of compensation which they will be looking for only when we start discussing with them the commercial offer. So that will be there happening in the next 6 months time frame, and after that we'll get more clarity on that. So as of now, we will not be able to tell much on that. And as far as the manufacturing growth is concerned, now that with the orders getting executed, the manufacturing growth is definitely it has to be around 15 to 18% growth has to be there every year, and with the repair and the overall growth of around 9 to 10% growth, we will be able to sustain our growth what we have shown in the current financial year of 13% on an average, both manufacturing and repair and overall put together. We will be able to sustain that growth.
Thank you so much, sir.
Thank you, sir. We have our next question from the line of Amit Mahawar from UBS. Please go ahead.
Hi, sir. Good evening. Congratulations on great results. Sir, the 480 billion order intake guidance, that does not include the MRO orders, right? My understanding is correct?
Yeah. MRO orders is, can you just clarify what is it?
Yeah, the 470 billion, 47,000 crore orders guidance for FY25.
Yeah.
Largely for those 3-4 platforms that you mentioned. That does not include the MRO orders.
Yeah, you're right. Absolutely right.
Great.
The repair and overall order accretion will be on an average 20,000 crores per annum.
Fair point. Thank you very much. And the second part is, sir, do you think Mark 1 in 97 is possible by the fourth quarter of fiscal 25, or you think the paperwork and the process will basically take it only to 26, first half, something like that?
No, but as the way things are moving, I think we should be in a position to conclude the contract by the current financial year, that is before 31st March 25.
Thank you. Sir, can I ask one bookkeeping question, if you allow?
Yeah.
Yes, the EBITDA margin guidance of 26-27% that you issued does not include any provision reversals or provision change, if any. That's the only understanding?
No. That doesn't include. We are only talking about the operating margin plus your depreciation and amortization, and of course, your interest income equity.
Fair. Because going by last 2 years, it has been reversing. I would assume FY25 will be the same reversal process.
No, there will not be any substantial reversals which will have a major impact on the EBITDA margin. There will be normal reversals which are happening in year on year, and that will only be continuing, but no major reversal will be there.
Okay. Good luck, Anand sir, to the entire sales team, and best of luck.
Thank you.
Thank you, sir. That would be the last question for today, and I would now like to hand the conference over to Mr. Harshit Kapadia for closing comments. Over to you, sir.
Yeah. Thank you, Manav. We would like to thank the management, Shri C.B. Ananthakrishnan, Director Finance, CFO with additional in charge, Chairman, Managing Director, Shri Jayadeva, Director Operations, for giving us an opportunity to host this call. We also like to thank all investors and analysts for joining for this call. Any closing remark, Anantha sir, that you would want to share?
Yeah, thank you for this opportunity. In fact, as somebody was pointing it out, we would also be happy to have this analyst call at least once in a quarter. Let us see that how to figure out that, and we will try to have the discussion and keep all the investors updated of what is happening in the company. And one thing which I can tell you is that the HAL is today in a very consistent growth profile, and with the sort of policies which has been initiated by the government, and with Atmanirbhar and the need for becoming self-reliant, I feel the question is that there is not going to be any dearth of orders, and we are also conscious of the fact that we also need to execute these orders, and we are taking all-round initiatives to see that these orders are also getting executed within the given timeline. So which would mean that the growth and the performance with the company has been reflecting in the last 2 to 3 years will keep continuing and keep improving year on year. and I'm confident that the sort of all the stakeholders we will be able to satisfy, whether it be the shareholders, investors of the company, or whether it be the customers, or whether it be our partners in the programs. We will be able to really keep all the stakeholders in a very happy frame of mind. And I wish you all happy investing in HAL, and I wish you and the company will always keep up to the trust and confidence which you have on us. Thank you.
Thank you, sir. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.